TGIF Warriors, how's everyone doing? Hope everyone's had a great week, has taken advantage of our promo and are now part of our community and in private chat after face every day. 2019, I hope it's off to a good start for you. So I just want to start with the euro. So, 115 was considered a pretty big breakout over this high. And, it's not acting like a great breakout because there was no follow through the next day. But it could be one of those trades where you just have to, believe in it and give it tolerance. And yesterday, Steve Olge said 115 wasn't as critical as 1480. Nice call. Steve pulled back to 114.84.85 before we had this bounce to 1540. So, I was a little surprised at the dollar bouncing as much as it did yesterday on this day because I'm still looking for the 94 level. So we'll see if it could, rally back to here. You know that the scenario changes if we have a breakdown like this. It only changed back above 96. Although I really don't think it should get back up there. Really shouldn't get much above the high that we had yesterday or the low that we had yesterday in the euro. So we'll see 1480. Right now it looks like a potential, A, B, C failing rally. So just a little caution about this breakout. What I talk about, too many opportunities. That was a tough close to buy, but so far you're being rewarded. I'd be careful under Steve's number now. We start trading under 1480, especially back under, say, this moving average at 1440. Okay, 1440 is as much latitude I'd give it to. Maybe it's not a breakout, but the uptrend is still intact. The fact that on this 4-hour chart, both price and momentum confirmed above 70 says there's a likelihood that after whatever chop happens in here that this high will be taken out. So that's my bias. That's why I'm not shorting it and I'm not long. So I'm neutral right now. Similar situation happening in the precious metals as well. So we had this pullback in gold right to where it had to hold here at the 50-day and pop. So gold's got to get going. I'd say back under 1290, 1288, I would abandon any bullishness, but there still is potential for one more high up here. Take out the stops of people that thought they had the gold top up here at 1298. In fact, this channel, which has, some pretty good touches on it, is probably going to come in a bit higher now. I was thinking 1303 or so, but let's see. It's looking more like 09 as a possibility, so we'll see. We could tag this trend line. When you look at things on Friday, you have to look at what kind of week we had. So basically, gold did nothing wrong, just like the euro did nothing wrong. Euro actually, if it closes here, it's still a positive week. But what I like about outside weeks is it sets up not the certainty, but the possibility of an outside candle, something like this next week. So if next week gold makes a new high, takes out new highs, and then takes out this week's low later in the week, I think you have something with certainty. Also, I know a lot of people are trying to short the S&Ps here. I think, eventually they're going to be right. I'm thinking that the S&Ps most likely see a very good week. A lot of people now looking at 2637 as halfway back. So I'm thinking maybe even shake those people out and trade up towards 26.90. Anywhere 50 to 90 is a probe. We have a confirmed low here, and some of the cycles I see have a flush coming in February. There's a traditional commodity February break. Maybe it's going to happen since everything is acting like one market right now. Everything flushes together. Everything's going up together. Perhaps everything comes down one more time for a shakeout. Then I think you have some pretty good long-term buying opportunities if that's a scenario that turns out. Again, this is the best day, in my opinion. I like advising people to join on Fridays because it gives you the whole weekend to get comfortable with the site and navigate it, get used to our dashboard and how to navigate that too. You get to hear Amanda when you log in, and you know, you could roam around and check out the chat room, but most of all, it's important to get familiar with our traffic light page, know what the different color codes mean. You have all the support and resistance areas. If you go back, the last technical update, for example, on the pound was 2 hours ago. So you're always getting updated technical information. Also, the push alerts are real handy. They come across not only on your workstation at your house, but we have the mobile app that you could use on your phone and on your laptop or a similar device and take us with you. So even though you may not be paying attention, we're doing that for you. So great time to join. I think this is, I know this is really, we have promos twice a year, maybe one other small promo, but this is one of our best. So consider coming here and just clicking it. Also, I know a lot of people want to, you know, spend as little money as possible. And I do think you'll get a decent idea about, you know, the great work that we do to edify and build up traders on a monthly plan. But, you know, I've been around for a while, and you really can't judge a trader, a money manager, a system, whatever, in 30 days. My ideal is like 90 at least minimum. So this is, I think after 6 months, you'll know. And you know what? After 6 months, you'll not only know, you will have grown. Know and grow in 6 months. So that's my preferred plan. Could always upgrade after that. So again, want to thank everyone. It's going real well. A lot of people taking advantage of this. It ends the 18th next Friday. So I really believe that this is going to raise your game because you're going to be surrounded by traders better than you, just like the last year and a half has been for me, and has sharpened me up. You know, iron sharpens iron. So with that being said, I'm interested in hearing what Blake has to say today with the pullback to the breakout and a little bit of an update in Euro, Blake. You know, not the kind of action that bulls would have hoped for. They would have looked for, I think, at least 1 day, 2 days follow through before a retest of a breakout. What do you think, bro?
You know, hey Dale. Well, first and foremost, I think that the breakout was such a big technical breakout, and let's look at the facts. We came down and retested 115 and held.
Okay.
We closed at 115.
Yeah.
Right. So
right.
Now, in the age of algorithmic trading, and you know, everybody's trying to trade against you know, basic technicals. There are some things that, you know, you take a big breakout like this. It didn't surprise me that they slammed it back down to 115. Caught a lot of people that were late getting into the, you know, into the game short, right, or excuse me, long. Got them out. shook them out yesterday.
Unless they listen to Volgi.
Unless they listen to Volgi, which I didn't listen to, so I'm sorry, I missed what he said. But we held the 115, and now we're bouncing. Now,
true.
It's very technical in nature. Now, did we break out yet? I mean, have we broken out like aggressively yet? No, we haven't. And I think a lot of it has to do with the market just, knowing that retail got really long. Everybody tried to buy up here. They just slammed it down right to where it should have gone. And now here we are, consolidating above 115. Now the key for the euro dollar at this stage in the game right now, like here within the next 20 minutes, is going to be the CPI data that comes out of the US, which I won't be around for. Steven Stelios will take over with you, and if the CPI data it comes in weak, which let's see, the market is looking for negative 0.1%. Let me grab my Bloomberg. I just accidentally.
You can't drink soda with sugar in it when you use a Bloomberg.
Right, you can't. You can't. So the month over month, and here's let me pull up the actual chart here. So this is what we have for CPI, and this is what expectations are, or the survey, and obviously CPI hasn't gone anywhere, and the Fed's been very clear about that inflation is not an issue. But if we see it come in weak, that's going to probably solidify some of the comments that we've seen. Even Clarita's comments last night were dovish, and this is one thing that supported the euro dollar overnight and got us back above 115.10 in Asian trade is Clarita's comments. So you get some of these, you get some of the inflation data ticking lower, despite wage inflation going higher and whatnot, and you're going to get people that start selling the dollar and feeling more comfortable about selling the dollar and having the euro up where it's at.
Yeah, because they're not fighting the Fed anymore.
Right. That's what really would open up the door for a move to 116 going into next week. Remember, this is the euro. This isn't the pound New Zealand that moves 200 pips in a day. This is the euro dollar that will grind 150 pips higher over the course of a week. Now we may have up 100 pips, down 60 pips, up 80 pips, down 50, up 100, down 70. Stair stepping our way up to 116, 117, but it's not like I said, it's not the pound yen that'll move 200 pips in a day and then move another 200 pips in a day. This is the euro dollar. Now, unless there's a significant reason for the dollar or the euro to stage an outsized move, we are going to get a stair-stepping type of movement, and that's really what we've seen all week. I mean, you can see, the up 120 pips, back down, 60, up 100, down 50, up 120, down 70, up. It's just stair-stepping, but technically we're holding a breakout and we're above 115, and really that's going to be key for this week. And it's not just the euro dollar. I mean, we have the cable too. Now the cable is up this morning on a newspaper report that Brexit will be delayed till March 29th. The market has received that.
You mean past March 29th, right?
Past March 29th. Yeah, sorry. Yeah. Thanks, Stelios. And it's a newspaper. But the market's liking it. Uresh, did I say his name correctly? You've met him in person. Uresh?
Uresh, yeah, Uresh.
Uresh, yeah. Okay, I just want to make sure I said his name correctly. He posted something about the market being really, short cable, and Reuters had reported this story about the spike higher really, signals how short the market is in the cable. And just so you guys know, here, let me pull it up really quick. Let's go over to Adam's site, and let's look at the cable just so you guys can see spec short cable exposure. Very short and extremely short and still extremely short. And the cable, these spikes are a risk of a squeeze, and all you need is some really positive cable or Brexit developments, and the pound's going to be trading north of 135. You know, I'm not long right now. I'm not long. I hope it goes higher, because if it goes higher, then that's just going to drag the euro up. But because what's good for the UK is going to be good for the Eurozone, in my opinion. So, but it's something that we need to pay attention to, because if the pound closes above 128, you know, you got this you know, nice little breakout happening, and then you look at the weekly chart. We had a false breakdown last week, and this week, you know, we have follow through to the upside. So I think a close above 128, or where we're currently at right now, 128.10, or, you know, let's just say we close at the highs of the week. That's going to be a pretty positive technical development for the cable. Now, obviously, the cable, you got to realize, is always susceptible to these Brexit headlines. That's why I'm just not trading it. I until I've got a clear indication that, you know, it's time to buy cable, I'm just not doing it. But that doesn't mean that hasn't prevented me from buying the euro. I'm extremely long the euro dollar, and I'm in one of my bigger positions that I typically will take. So I'm in you can call it a full size position in the euro, and I look to even get longer too if inflation data comes in weak today and we close above 115.50. I'll take the euro dollar long going into next week, because look at this chart and look at this crap. I didn't mean to do that. Well, I'll get rid of that. Here, let's get rid of that. Actually, I'm going to do this: euro US dollar. Let me pull it up on a different feed so I can give you here's a better idea of what we're looking at. So this is basically a really bullish white candle as it stands right now. Now, if we close at the highs of the week, that's going to be an extremely bullish euro weekly candle. We still have many hours left in the day and many hours left in the week, so I don't want to get too carried away here. But again, depending on the data, if we have weak inflation data and the euro closes towards the highs, that's going to be a nice bullish breakout. And, you know, you have a descending wedge, you know, pivot off of, you know, nice rounded bottom here on a weekly basis. You know, the euro looks like it's going to go higher. Now, one of the other things, let me draw this out for you. It's not like I'm looking for the euro to go to 130. So just let's just stop before you start getting into that, you know, crazy territory, like you're, you know, oh my God, Blake's so bearish the dollar. You know, I'm not. I'm really not. Okay. But what I think is happening is this. So
nice.
Yeah, I mean, this is a weekly chart. So, you know, what we're looking at is maybe a move towards the high teens, maybe 120. And then, so let me, again.
You have a great technical imagination, Blake.
Yeah, draw it for you. And then, you know, you can, you know, you can visually, you know, murder it however you want going forward. But, you know, you know, do we do something like that? Yeah, I think we do. Okay. So, you know, people that are fairly new, Blake, you know, it took 20 years of doing charts for you to become, because you've seen moves like this, you know, over and over again. So, you know, that's how you could forecast a potential scenario. Yeah, I mean, I've seen this play out many times. and you know, I've when I first embarked on my first charting course, if you will, you know, it goes, you know, dates me back to 1997, and when I used to use protractors and actually print out charts and take, you know, a printed out chart to the trading floor with me the next day and figure things out. I mean, it's been a long time that I've been, working on these types of things. But what I'm trying to point out to you guys here is that I think that the euro, the risk is, like I said, on a weaker CPI data, as we start moving higher and we make our way higher in the euro over time. And it's not like I'll keep a position like I have on right now. Not like I'm going to keep that on for infinity and beyond. I'll just be working core positions, especially if we break out higher, by the end of the week. I'll keep a core position and I'll take some off as we hit 116, and then I'll buy it back at 115.50, and then I'll sell some more at 118, and then I'll sell, then I'll buy more at 116.50 at the breakout point. That's how I'll manage a core position long, but my bias will be long. My bias is bullish. That's why my bias is bullish right now while we're above 115.
You know what else is important? You're really mentoring today is that you say you'll always hold a core, because we can imagine being able to trade these levels and swings, but one day you turn your head and you miss that pullback, or it happened at night when you were asleep, but you still have your core position.
Yeah,
and that's really the key.
Yeah, and even if I don't, I'm having a frustrating week and I take everything off, because it's like, let's say I make money in the euro, but I lose money in the peso, or like I did earlier this week, or which fortunately was a very small loss, but regardless, I'm just using that as an example. Let's say I take a loss somewhere else. Then at that point in time, I'll say, okay, well, I'll take my core position off just to book profits, just from a P&L standpoint, because that's how I get paid. Well, we all get paid eventually by making money, but I mean, I get paid on a monthly, quarterly type of basis. I might book profits, but it keeps my bias bullish, and then I'll be like, okay, well, I'm going to stay bullish the euro dollar now, going into, depending on obviously what's happening on a macro level, but I might stay bullish. So that means I'm only buying dips versus shorting rallies. And that's also an important concept when you're trading longer term or in a trend. You identify that the trend has shifted, or it is moving up or is moving down, and you try to trade in that direction. And I'm not saying that I don't fade moves. I do. I'm as guilty as anybody else out there. But I try to stick more with the trend, and that's, we were talking about New Year's resolutions earlier this week, where I'm trying to just really focus on taking one big position, or kind of really targeting what I'm doing. The euro has been on my crosshairs for obviously a couple months now, so that's why I'm long, and I'm staying long for now. So and I might be wrong by the end. By the end of the day, if we close below 115, I'm not going to be in the euro dollar long anymore. I mean, that's just a fact, because it will end up being a false breakout. It'll end up, see that wick there, it will end up being a long wick, maybe a pin bar, and I'll say, you know what, I'll scratch it for now and revisit that idea later. But anyway, that's just kind of what I'm thinking with the euro. Let's really quick, let's talk about the Aussie. And some of these other pairs. So the Aussies get really bullish. I mean, we talked about a major reversal squeeze as the market got short and chased the market lower, and then we reversed, and here we are, trading. We're almost up at the 78% retracement of, this is the November highs to spike lows last week. I mean, we're just continuing the squeeze. Kiwi as well, as Kiwi's bouncing after squeezing, and then you got the Canadian that's been extremely weak. Now the Canadian is bouncing a little bit, or there's a little bit of Canadian dollar weakness, as crude oil is weaker today, and crude may have near term peaked, but I have to point out with crude, we're well above 50, and if you start, I'll just draw this out for you guys before Steve gets here. So, I mean, if you think about what we've got here, we've got probably a big head, and then we might do this, and then, possibly, develop some bigger, longer term inverted head and shoulder pattern. So I wouldn't get too bearish crude, and I wouldn't get too bearish the Canadian at this point, but just kind of thinking out loud on what may happen, especially if we eventually break above $55, which has been a big, I'm trying to there, like that, a big, resistance zone that we might come up to. So last but not least, the US dollar Japanese yen, it's actually holding up. I'm looking at 108, 109, basically just kind of watching this this zone here. I'm not trading the yen right now, but 108 to 109 is basically what kind of my, all right, are we risk on or risk off type of mode. And as you pointed out, Dale, with the failure at of the S&P at the 2600 level, I guess I'd be more inclined to watch for a downside break eventually, but we'll see. Anyway, I'm going to pass it over to my colleague Steven Stelios. But guys, if you haven't taken the plunge and joined the ForexAnalytix community, this is the time to do it. I mean, we only have these specials a couple times a year, and it's like maybe like a few times a year, 3, maybe 4 times a year where we give a steep discount. Other than that, you're gonna be paying full price. So if you want to join the ForexAnalytix community, or if you're on the fence, this is the time to do it. So we'd love to have you, and we appreciate the support, and I appreciate you guys being here each and every day, even if you are not in the ForexAnalytix family. So thanks for listening in. I'm going to pass it over to Steven Stelios. I'll see you guys for the week ahead video this weekend, and thank you everybody for being here in TGIF.
Have a great weekend.
Thank you, Blake.
Thanks. You guys too. All right.
Hello, Steve. Good call at 114.80, giving the pullback on euro a little more room, and really came off 84 very nicely yesterday afternoon.
Yeah, thank you. As I said, 114.50 was 50 to 60, was the line in the sand for me.
That's what I said.
So far it's held, but as I told you yesterday, can it push higher from here? Absolutely it can, but am I really convinced that there is big follow through coming? Not yet. I want to see I want to see more things happening. That's why I'm not involved.
Great level though.
And I'm not looking to get involved with the euro soon. I think the market has been producing much better opportunities lately, so why not get involved with them and struggle here with the euro, which is not in a hurry to do much so far. So far we have a nice pop in the cable, but that doesn't also change the fact that the move higher in the cable doesn't look impulsive in any kind of way. The S&P, at least in the short term, seems to have stalled at the 2600 area. So we need to see what's going to happen from here. But this is definitely a good level for us to get some kind of a rejection, some kind of a pullback. There is no question about it. Stelio, by the way, it's less than a minute now for the CPI data, right?
Yes, and I'm here waiting for the numbers.
So let's focus more on the USD yen, and then we're going to talk about the bonds as well. So USD yen, as I was saying yesterday, and we're going to see what's going to happen now when we get the CPI numbers. There are two scenarios here. One that we would go straight lower from there. Another one that we might see this consolidation, getting extended somewhat, perhaps another push higher before lower. But it still looks to me like we should at least come down and retest the 105.50 area, not in a flash crash fashion like we did the previous time. So let's wait for the CPI data, and then we're going to go through everything else. Should be just a few seconds away.
Coming out now. In line. Yeah, everything is exactly in line. I bet dollar yen is not budging.
Not
Yeah,
much.
that's why we don't. Yeah, real average hourly earnings increased 0.5% over the month of December, though. CPI 1.9 expected 1.9, core CPI 2.2 expected 2.2. Everything in line, but 0.5 hourly earnings is a decent number. Everything else though in line. So yeah, we haven't seen any response from the market following that. So so far it looks like a non-event since we didn't have any kind of a surprise. So yeah, I was saying about the USD yen that we can get more upside before seeing another leg to the downside. Now it's a good idea. We didn't do that yesterday, so let's have a look at what the bonds have been doing. So I was monitoring this ascending channel in the 10-year treasuries. As you see, we're striving to hold it here. Now, as long as we do hold it, we still remain in rebound mode, and the bunds are looking even stronger than that. Actually, bunds have actually broken above a very, very key long-term descending channel, and they've broken above resistance. And we all, despite coming down, we seem to be appreciating once again. Although I have to say that this evening star formation here looks quite a good signal. So I wouldn't be surprised if from somewhere here we see another push to the downside. But I would want to see a move back below 163 to start, to even consider the possibility of a false break higher. Otherwise, if we find support down there, we bounce, I think we should respect this breakout because it's a major breakout in a very, very long-term ascending bullish trend. So we shouldn't disregard that no matter what. And just look at the RSI. I mean, the RSI has been hitting 90, right? And this is the daily chart. So even the RSI shows that there's a very good chance that we're going to see some kind of a continuation. If you remember, we said the other day that being short the US dollar looks good, especially against commodities and commodity currencies. So Blake showed that before. No surprise that the Aussie is still appreciating quite nicely, and no surprise that the Kiwi is continuing. I said yesterday that I consider this to be a bullish breakout. So we should see some follow through now. Actually, RSI is also testing a descending trend line resistance. So I think there is a good chance that commodity currencies will keep overperforming as long as the risk stays decently bid. It's not that we really need to move higher. As long as things don't go scary, that should help. Now, gold, silver, both of them clearly in triangles, so clearly in consolidation patterns. That means that you should expect higher highs from here. At least one more push higher, I think, remains the most likely scenario and outcome. I forgot to mention yesterday, by the way, that Bitcoin and Ethereum are in danger of having a failed attempt to rally, but we're going to monitor. I was really expecting that Bitcoin would make it to 44.30, which was the beginning of the wedge, and the 38.2. But after that huge move we had yesterday, we had like Bitcoin roughly 10% lower and Ethereum roughly 15% lower. There is a chance that we're just going to fail and move lower from here. So that's something else I'm paying attention to. Just out of curiosity, I don't have any exposure in cryptos. The other thing I had completely forgot to mention, but I did. I do post this daily on the chat room, or almost daily, is that we were monitoring at this triangle, and I was saying that a breakout should produce continuation. If we break to the downside, we should see continuation towards 670. You see, this is a nice confluence of supports. If we did see a break higher, we should have seen some kind of an extension of the triangle, a new high for sure. So we did break lower, and as you see, we do extend. I was warning before we broke out, and I also mentioned it, the day we broke lower, but I forgot to saw it on the webinar. So this is definitely a development that's worth noticing. And the PBOC also noticed, because if I'm not mistaken, Stelio, we had some comments from the PBOC earlier yesterday that
yes,
in essence,
they didn't like the sudden appreciation of the yuan, and they actually even said that if it continues, $670 yuan would probably be the floor for now. So they actually said the number.
Which is exactly the the support area I'm looking for. So yeah, that would be nice.
PBOC has a yuan chart up in their offices. What do you think?
There's no question about it.
No! I know they're subscribers to Forex Analytics.
Analytics, that's very true, and they monitor the chat room every single day. Now, no kidding aside, as you understand, for example, Wheeler, you remember the central banker of New Zealand for several years. Wheeler, for example, was a trader, right, in the past. And yeah, so trust me, I'm pretty sure that they do take technical supports and resistances into account whenever they decide to take action, right? Because obviously a reaction from a level that's also interesting from a technical standpoint is a lot more likely to be respected by market participants as well. So, for example, if you see a rebound from 670, even if you're a technical trader, you're going to be like, oh yeah, sure, this looks good. I mean, it was the 200 daily moving average. It's almost a 38.2% fib. It's a previous resistance and support area. So, why not? And you're more likely to actually buy the USD Chinese yuan there and in essence help them in their task of, pushing this pair higher than anything else. So I'm pretty sure that they take technicals into account as well. And, as I said, why not? I mean, they only have to benefit from it.
They're mentored by the PPT,
the Plans Protection Team, right?
Yes, Steve.
most probably yes. Most probably yes. Now, another pair I haven't, I'm focusing more today in things we haven't shown here during the past couple of days. CAD yen, a nice breakout from possibly a descending wedge here. And as you see now, this is the fourth consecutive day that we get candlesticks of indecision, right? Doji, spinning top, hammer. So far today, we're seeing like, a little shooting star. Bottom line, this tells me that we should produce at least one more leg to the upside to retest this confluence of resistances at 83.40. So I would have to say that in the short term, CAD yen looks okay for one more leg to the upside, either from here or from a little bit lower. Now, Blake mentioned crude, and let's go down to a 4-hour chart in crude. There it is. So crude showing some, rejection from this horizontal resistance area, still holding this ascending trend line support though. I wouldn't be surprised if we saw a pullback from here. A nice area for a pullback would be this confluence of supports at around 49.50. And as Blake mentioned, I would be looking for more strength following that. Okay, so I think 49.50, 49.60, 49.70, that area there is probably a good area for those that missed the initial rally to load on some, because I do think that this corrective move higher can definitely run, higher and for longer than most expect. Let me also say that we are seeing a nice rebound here in the pound Aussie from the 61.8. So I already booked half of my position here because, once I saw this this week in the 4-hour candle, it looked like, once you see such a week on, after tagging such an important level, you start being more cautious. So, I booked a nice profit. I am short with a cost average one of 179. So I closed half there, and now I have the rest trailed just above this week high, so just barely in profit. But I have to say that this is a nice reaction from here, and if you have a look at the pound Kiwi, also a very nice reaction from a nice confluence of supports here. Previous horizontal support resistance area, the 50% fib as well. This looks like a very nice head and shoulders formation. On the other hand, so if this is to play out, we need to see a rejection from here, because in essence we are retesting the neckline. Now, if we do close above it, then this invalidates this scenario. Now, on the other hand, Euro Kiwi, for example, which broke below this head and shoulders formation today, is just just remains below there. So since the euro is not enjoying like a bigger pop, this head and shoulders formation might end up playing out. And let's have a look at the Euro Aussie as well. Euro Aussie, this is likely a bear flag. So I would like to see another push lower, because we have a nice confluence of supports roughly here at 158.70. So I would want to see that level getting tagged, if not even lower, because there is another nice confluence of support, at roughly 157.80 to 158, the 61.8% fib, and another horizontal support resistance area. Yes, Scott says they just copied the plans protection team. There's no question about that. Probably they're the leaders in what they do. Now, let's see what we haven't covered yet that is of interest. Having to do with the metals, we don't need to go down to shorter time frames. I said that we're still consolidating. This looks like a bullish consolidation to me, so I would be expecting some kind of a follow through for at least one more high. Let me reiterate here that first of all, USD CAD struggling here to show follow through, but unless it manages to rebound, it might have one more low. In any case, I think it's in sell the rally mode. The same thing with USD NOK, which we have to acknowledge though, it's holding, and I mentioned that yesterday as well, a very, very important key level, right? This is a long-term descending channel that we broke above, and
Great luck.
we're testing it. Yeah, so obviously selling it exactly here doesn't make much sense, right? Because even if there is more downside, it's not unlikely that the bullish scenario is that we rebound from here and we go to new highs. Now, even a bearish scenario would say that
maybe a right shoulder.
Exactly, would say that we can rebound towards that area, right? Previous support resistance area, and then move lower from here. So, those are the two scenarios. In any case, selling right on support, doesn't seem very smart here. So
Andre suggested after this, Steve, DAX. I don't know if you saw it on Skype, but Andre must have something close to go on.
I didn't. DAX Steve drives Dale. Okay, let's have a look at it. So let's have a look at the European indices, actually, since you mentioned it. So, let's have a look at the other in general. Nikkei to begin with. Nikkei, as I said, this might be some kind of a bear flag, so I wouldn't be so enthusiastic about it, especially given my outlook for the USD yen. So I think it's worth monitoring, because we might get rejected from here.
What a weak recovery compared to U.S. indices.
Absolutely, no question about it. Italian stocks here, worth paying attention to the long-term picture as well. Just look at this. So, if we zoom out, just look at this. Okay, we had the pre-financial crisis high, then we had definitely an impulsive move lower. And what should be very worrying to market participants is the fact that Italian stocks, despite so many stock indices overperforming for such a long period, what do you see here, Dale? Clearly, a corrective formation, right? Very clearly.
Yeah.
So I would expect that when the next recession comes, the Italian stocks are going to suffer greatly, especially once we break below this long-term ascending trend line. That's going to be, a huge breakdown, and there's going to be a lot more pain to come, and especially for people that are monitoring, how politics work in Italy. I wouldn't be surprised to see very stupid things happening during the next financial crisis in the political level as well.
Yeah, I mean, it wouldn't take that long for it to get back to that chart you showed, back to the 2009 lows and 2015 lows, which
equivalently, just look at the Spanish stock market. We had this, pre-financial crisis high. Then we moved lower, and look at this huge triangle that is evolving. Now, look at this. First of all, we did see a break below it, but we did rebound fast. In essence, we held this ascending trend line. So I have to say that the Spanish stock market is already toying around with quite a key area here. So it doesn't look that good, as you understand. And now we would only be looking higher once, or if we break above this channel. Otherwise, it still looks quite weak. Now let's go to the FTSE 100. So if you see the FTSE 100, if I extend this, the FTSE 100 got rejected from the extension of this previous triangle, right? So here is the previous triangle. We got rejected from there. I expected that we might have gotten rejected earlier, from here. So be a little bit careful here, because I wouldn't be surprised. Anyhow, we can definitely, even if it wants to continue in a bullish mode, it can definitely at least come down to retest this 6850 area before moving higher. Now, if it loses the 6850 area again, we're headed lower. Now, let's have a look at the DAX. I was very clear about the DAX. There was the potential of rebound because this could be interpreted as a descending wedge. At the same time, we had some RSI divergence that is quite noticeable on the daily chart. But as I said the other day, as long as we remain below 11,000, which is this previous low, I can't really turn bullish. Although there is a potential, as you see here, Dale, for an inverted head and shoulders formation. So, for example, if now we rebound from here and we develop some kind of a shoulder and then go back at 11,000, then I will be interested, because then if we break 11,000, not only we're going to have a very nice technical formation, a very reliable technical formation, we're also going to have a very clearly defined target, right? Because it's going to be roughly an 800 handle target, because the low was near 10,200. So 11,000, and guess what? Not coincidentally, the target of that inverted head and shoulders formation is going to be the 11,800 area. Why is that so significant? Simply because the 11,800 area is the neckline of this huge head and shoulders formation that we developed. So back at the crime scene, right? Which makes me feel even better. I like having formation targets that coincide with very nice confluence of supports, resistances, or whatever. Makes you feel even more confident. So I'm not excluding the possibility that I would even be buying the DAX, but in order for me to do that, this is the trading plan, the one that I just said. Now, unless we see something like that happen, I think that you need to respect the possibility that we might get rejected from here, as I drew the other day, and push even lower, right? So we're going to find out, I guess, within the next week, most probably. So it's worth noticing. So I don't know what Andre is looking at. Perhaps he thinks that we have bottomed, and as I said, there is a chance that we have bottomed, right? But I want to see 11,000 being taken out first, and then I'm going to feel confident about buying it.
Would that be an ending diagonal down there, that wedge, Steve?
Bearish 3 drives on the 4 hour. Okay, so let's go to the 4 hour chart and have a look at what Andre is looking at. Let's see. 4 hour.
Oh, I see what you're saying.
Yeah, you can interpret this. Let me remove this. You can definitely interpret this as a wedge of some kind. Yeah. Yeah.
Even a bullish interpretation would take it back down to your moving average, your green one, for a possible right shoulder.
The 50 DMA. Yeah, the 50 DMA. Here, yeah.
Maybe that's a right shoulder. Okay.
Absolutely.
Thank you, Andre.
So, you know, some type of a pullback looks very likely because this is a key area. And as I said, let's see if this move lower is going to be impulsive or corrective. If it's corrective and we move back to 11,000, then we have a very nice and clean formation, which I would be interested in trading. Now, on the other hand, if we start, you know, accelerating to the downside, we're most probably heading to new lows once again.
Steve, Coach has a question.
Yeah, go ahead, Coach.
You know, we had a good guest yesterday, and he's from India, and he was talking about really a dramatic move, basically down in the rupee, but up US dollar rupee. Have you ever traded it? The rupee.
Yes, but it's been, yes, I'm actually sure, but it's been centuries since I traded it. But if the question is, do I monitor it? You can see from my chart that yes, I do monitor it. And the last time we had a friend here asking, I said that, you know, this is a nice confluence of supports, and voila, we have rebounded from here, right? So just look at this. You see how important this support area is at 68.
Look how impulsive that move was. So, yeah, because he has levels, you know, I think above 8. I'd have to go look at the video, but he's got huge, maybe even up to 90 or something. But looking for sharply lower rupee, sharply higher US dollar rupee, and higher rates on rupee
just look
debt.
At this. We are in an uptrend since the financial crisis. Okay, I mean, from the financial crisis, we went from roughly 40 to 75. And we have no reason to believe that this pullback, no matter how complex it's going to prove, because it might have more to run. I mean, for example, let's say from the most simple thing, we can end up doing something like this, right? We might end up doing something, a deeper correction, something like this. But as long as we're seeing this type of price action with the history of the pair, I would agree with him. I'm going to be monitoring this descending trend line. Once this descending trend line is taken out, you have every reason to believe that the USD INR is heading to new highs. Every technical reason to believe that that's going to be the case. Okay.
Okay. Thank you, buddy.
And on the other hand, as we saw yesterday, the rebound in the Nifty also looks corrective. So I would be expecting more weakness there as well.
Okay. Thank you for covering the globe.
We have a question about if we have possibly a double bottom in the USD CAD. I didn't see something like that on the on the daily. So let's have a look at the 4 hour. Now, if you're talking a double bottom, meaning these two little wicks here, you know, this is not what I want to see about a double bottom. You know what I mean? I mean, I don't want to see just, 2 4 hour charts, almost consecutively. I mean, there's only one 4 hour chart in between tagging the same level. I mean, this is not, I mean, a double bottom would be something like this. Okay. And then, spending some period, then retesting that same area, and then breaking, higher. That would create some kind of a rectangle here and then break higher from there. So no, I obviously see some buying interest here. I mean, the chart is clearly showing that there's some buying interest here, but so far I have no reason to interpret this as something more than a simple consolidation. Okay, so my advice is that I wouldn't be buying the USD CAD, not because it can't work for a rebound, but this move lower is impulsive, which means that even if this is part of a correction, what I expect to happen is that even if we rebound from here, I expect more selling to be produced, after some kind of a rebound. So if you're really looking to buy the USD CAD, I would be buying it lower after another push to the downside. If you're, on the other hand, looking to sell the USD CAD, I think that we will rather soon have this kind of an opportunity. Depends. If we push lower towards 61.8, then any rebound towards this zone should prove sufficient to then produce one more move lower. Now, if we rebound from here, we might actually retest, this area, that high there, and this consolidation here before moving lower. So, depends on what you want to do. Definitely, I wouldn't be selling here in the short term, but I would also not be buying here thinking that this might be, a low, because I think that, there is a lower low coming, very likely coming within the next, several days. Hey everyone, let me start by saying how much I enjoy ForexAnalytix so far. Only 1 week into my experience, Kiwi showing strength. Thank you very much for your kind words. Kiwi showing strength across the board. I'm short NZD CAD currently. Do you have any opinions on the pairing given NZD strength? Let's have a look at it. Let's have a look at Aussie CAD and Kiwi CAD, since you mentioned it. Let's have a look at both of them. We haven't done that in some time. So, okay, Aussie CAD, this spike lower is, if we ignore the spike lower, actually, let me take off the magnet. Let me also switch that blue. Okay, so if you ignore the spike lower, I would have to say that this move to the downside looks pretty corrective to me. Okay, so I would have to say that if I ignore this spike, it feels to me like if we take out this triple confluence of supports, of resistances, sorry, and why is it the triple confluence? I'm zooming in so you can see, because this is the 50 daily moving average, the 200 daily moving average, and support resistance area. So I think that if we take out this 95, 80, 96 cent area, I think we're headed higher. Okay. I also don't need a lot of imagination to count 1, 2, 3, 4, 5 waves up here. So having to do with the Aussie CAD, I have to say that I'm viewing this move as corrective, and I think there's more upside. Now, let's go to the Kiwi CAD. Unfortunately, same deal applies here. We had a perfect 5-wave up. Not only 1, 2, 3, 4, 5, but as you see this target, perfect equality of wave 1 with wave 5. Perfect equality, perfect to the pip. And, this makes me think that this move lower has a high chance of ending up being corrective. Now, I would want to see a break higher from this area that I'm drawing here, roughly 91 cents. But if we do break above 91 cents, I think that there should be more upside. And the next area of resistance is at 95.20. So I would be very cautious here if I was short Kiwi CAD. That's my point of view. Very cautious. Okay. Greetings, Steve. Your biggest conviction trade right now. Thanks. Good review. Right now, I don't think I'm very, very convinced about something. I was very convinced about the rebound in crude. That's why, I made a killing. I mean, I made more than 10% of my account, within January in that. But the problem with me, or the good thing with me, is that I have a very high, I set the bar very high, having to do with high conviction. That's why I don't take too many trades. So, I had a very high conviction that there would be like a very big correction in crude, because crude can easily even through a correction like move high like 10, 15, 20%. But that's already been done. And as I said before, if you want some kind of a conviction, I would probably be buying again a move lower in crude, but I want to see a move to the downside first, towards 48.50 to 49.50, and I want to see it stall there, and then I would be interested in buying it once again. I was feeling quite convinced about the downside in pound Aussie. That's why I was short, but I don't like the price action that we're seeing today. So I wouldn't be recommending it right now, right here, right now, because we tagged the 61.8 previous support. We are producing a hammer on the daily. So when I went short, I said it here on the webinar. A few hours later that we had a webinar, if you took that one, you would have been, quite nicely in the money. Now, having to do with the rest, I'm in wait and see mode. Why? Simply because I'm not yet convinced about the move lower in the dollar. So, this is something that needs to be settled. I mean, what's happening here with the dollar before I get more comfortable with, the vast majority of FX pairs. I feel quite confident that the crosses will be more interesting, and I would be feeling more confident that the commodity currencies might keep overperforming in the short term. But that is not the only thing that you need. You also need something that has an appealing risk-reward ratio, right? And at the
How about the
moment,
S&P, Steve? You're starting to build a position, a short position.
Oh yeah,
right. So
I've
I
already
think
started.
that's pretty high conviction for you.
Yeah, it is.
All right.
I mean,
So you
I've
didn't
said that
remember
many
what
times.
your high conviction trade, but I did, buddy.
Yeah, but something. Yeah, I do feel confident about it. But I didn't think about it because I've said that. I'm even today I repeated that. So I do think that there is more weakness coming in stocks, right? So yeah, you're right. I focused more on what's happening in FX, having to do with stocks. I feel quite certain that we're not done moving lower yet. So I was more than certain here. Am I 100% certain here? No, but I'm very sure that I want to have exposure to the downside because the risk-reward ratio is very nice against 26 up to 2680 at max. I don't want to see a move above this zone here, 2690, right? So I think that building a position here as I'm doing is is something I want to pursue. So I already have accumulated some position here, and I'm more than willing to add on the way down. More than willing. Now, as I said, there are some setups though that are building as we speak, right? Like, for example, the DAX can build a very nice setup. So, I'm going to keep you, up to date with, whatever is changing. Coach, do we have an interview today?
Yes, Boris Schlossberg is with us today.
Okay, perfect. So enjoy the interview, and everybody have a great weekend. And as usually, we're going to be back on Monday, right?
Okay, you too, Steve. Great review. You're the best at putting the jigsaw puzzle together every day. Hello, Boris. I'm going to make you the presenter. Welcome to Face. Looking forward to talking to you. We've done this before, only at a different place on FX Street. So
just one sec. Let me.
Sure.
Give me just one sec. I just want to put on charts for you guys. Actually, you know what? Maybe I want to put something else on. Forget the charts for just one sec. Let me see. I want to put on the show. Okay.
Okay.
Let me show you my screen. Just one sec. Here we go. All right. Hey guys, how's everybody doing?
Hey Boris, how are you? I love your commentary on CNBC. You don't talk a lot about technical areas on CNBC, but you talk a lot about fundies, and that's part of trading too. And I'd like to start off with one of the reasons why you're here. I'm not surprised Forest Park FX is also sponsoring this because they're always trying to help the retail trader. But it goes back to your article that you wrote that my robot is better than me.
Yeah, I wrote this article actually just almost at the end of last year. I write a weekly column, which you guys are welcome. It's free. You're welcome to sign up for it anytime you like. As a matter of fact, if you sign up for the Trader Fest, you'll automatically get the weekly column from me. And it's just my reflections on trading, life, everything else in general. I've been writing it for almost 10 years. I think I have like 1,000 columns. People have been dying to. They've been asking me to put it together into an ebook, and I think I probably will sometime this year when I have some time. But I wrote this column at the end of this year that said my robot trades better than me, and it was a very, in some ways, painful realization. Because for the longest time ever, I've always been developing systems, right? But they've always been semi-automatic. The systems that I've developed have always been just execution only. They're just there to execute the setup. It was my job to constantly watch the system and turn it on.
So you managed the trade after your system would give you a signal. Yeah,
exactly. It was always very discretionary. In other words, the system would pick up signal, and I would be discretionary about it and just try to use it for execution purposes and so on and so forth.
Right.
And then we've really been working all of 2018 on a trend-based framework. It's not a system. I really can't even call it a system. It's really it started out as a system, but it really became a framework. And eventually we got it to the point where it was, trading by itself. And I was trading against it. In other words, I was letting the robot trade automatically and then choosing myself which signals I would take, which I would not take. And I was getting eviscerated. I was destroyed by the robot because making proprietary judgments, I was subject to all the human frailties all of us are. Confirmation bias, immediacy bias, every psychological trick we all know that we're all subject for, no matter how smart you think you are. As a matter of fact, the greatest thing I think the robot taught me was just how not smart I am. I mean, it really taught me probably the best value in the market, which is to be humble. But as I started trading that, I realized, you know what? This is a much more intelligent way of doing business. And then all sorts of other things started to happen that just made it so much better. Like, one of the great, if anybody who trades, all the time, and I was, by the way, and I still to this day, but not nowhere nearly as much so, a day trader, right? I was a guy who used to I was looking at 5-minute chart, 1-minute chart. I'd love to do 10, 20 trades a day. But the problem with that kind of approach is it's psychologically massively taxing, without you even realizing it, how much of a psychological tax you have, because it requires instant and total focus 24 hours a day. So what happened was, as I was trading the robot obviously was taking trades all the way throughout, while I was sleeping, while I was eating, while I was away from the desk. It was creating trade ideas without any pressure from me. I didn't have to feel the pressure of creating trade ideas on a day-to-day basis. As a result of that, I had enormous amount of time and psychological relief. And as a result of that, my vision of the market became much better. And we started to make sort of, selective but much better proprietary trades than the ones that that I basically was doing by myself. So really interesting.
Could that be because when you make a discretionary decision, your ego is involved, and if you don't have the pressure of always making those decisions, you can see the forest from the trees, like Forest Park FX.
You can, and I think the other thing that this satisfies, and that I think almost every one of us suffers from, is this. I wrote this actually. I think it was my last column. The single greatest weakness of every trader is boredom, right?
Yeah, hard to wait.
I guarantee you that if I did a autopsy of all your worst losers, of every loser that cost you half your account, I guarantee you this, because I've done this with so many traders, including, of course, myself. Almost every single huge losing trade was a result of a bored trade. You were bored, you took a trade, it went against you, and then you became emotionally invested in it. Now you're going to prove the market wrong, and now you're going to prove the market wrong, and now you're dead. And what was fascinating is that the robot took away the boredom, because the robots made its own trades. I didn't have to, constantly. I was already engaged in the market via the robot, so I could just simply passively, see where positions were, look around, and that relieved me from making stupid trades. I guess bored and stupid trades are pretty much synonymous. And everybody.
Did you code this robot? How did you come up with this robot?
Oh yeah, no, there's a guy in my room, in my chat room, who I've been working with for years, who's just a wonderful, wonderful human being out of Australia, and we collaborate, and he codes. You have to understand that when you say, "Did you code the robot?"
Build it.
Yeah, no. What I was going to say is that it's like writing a novel. There's easily 40 to 50 drafts, from your original idea, which is always idiotic, to your middle of the road idea, which is mildly, tolerable, to your ending idea, which is almost nothing like the one you started with. That's pretty much how the structure
work in progress. It evolves. You're always tweaking it, because wouldn't you say there's a possibility that the robot you have today with compressed FX volatility may not be as effective when huge FX volatility like that bear raid? How did it react to that bear raid that we had on New Year's Eve, Boris?
It actually, well, it's interesting enough. So the thing about this, I'm just trying to extend this so everybody can see the titles here that we're going to be talking about. And actually, by the way, if you guys know Jamie Satel, he's so important that I gave him a whole other row. Basically, I couldn't fit him into the row, so he gets a full row here.
I thought it was Jamie Satley.
Yeah, whatever. His last name. I've known him for years, and I still can't pronounce his name properly.
Now you will. Satley.
I actually. Jamie actually, like when he was in New York, spent his first 3 months living with me because he needed a couch. So he and I go back a very long time. Yeah.
Brothers.
He's a great guy, wonderful family, and a really, really great market tactician. So I totally lost my train of thought. We're talking about the volatility. Yeah, the
bear raid on New Year's.
Yeah, there is no such thing as an algo that can work across all volatility regimes. Is the essence of what you do is understanding that certain volatility imprints are going to be negative for your position. Now, the thing that's interesting, the other thing that we've sort of discovered as we're running a lot of these algos, is that volatility, of course, is very different across time frames, right? So even if you have large volatility, the diversification by time frame. So we run this on lots of different time frames. We run on a 1 hour, on the 4 hour, on a daily, and the other great discovery, not discovery, this isn't anything new, but it really proves, I'll show it to you. I'll actually show it to you.
The longer the time frame, the more successful the algo. I'm just guessing.
Absolutely. There's zero doubt. As a matter of fact, let me just prove this to you. Hang on a second. Let me see if I can find this. Just bear with me.
Okay, let me hook up the polygraph.
No. You don't need a polygraph. I'm going to show you. I'm going to show you. Here it is.
So isn't that something that, all of our philosophy about being macro long-term is verified by machine?
Yeah, it's verified. This actually is great. This isn't the latest screenshot, but it's like from a day ago. But here's what you can see from the description, right? You can see from the description that the 1 hour barely make any money, right? The 4 hour make very decent money, and the dailies make all the money. That's the bottom line. Like if you look at the percent contribution to the P&L, 80% of the contribution, basically the 1 hour is just for your enjoyment. The 1 hour is just there to keep you from being bored. If you break even on the 1 hour, you're lucky. And that's just an unbelievably important realization to most traders. Most traders spend all their time on the wrong time frame and are guaranteed to. One of the greatest things about Jamie, I got his picture right over here, is that ever since I've known him, the guy has always been a guy who traded on the daily. He has always had like the patience of Job. I remember one time, like in the long days, he was long Aussie Kiwi for literally 40 days. And this was in the days when Aussie Kiwi just would not move. And it would just sat there. He just sat there. It didn't trigger his stops. He just sat in the trade. And then eventually the thing just broke out like a rocket. And it was a huge trade for him. And it was just, of course I ignored the lesson then, but it's a lesson that I'm really relearning in my old age, because it's so important to see this. There's zero doubt here as to
how old are you now? You say you're in your old age? Huh?
I am
we
way
sure
too
our birthday, same birthday.
Let's just put it this way. I've been getting my AARP card in the mail for much too long. The ultimate.
Yeah.
But
okay.
But these are kind of things that are really interesting and important that we learned through algo trading, which makes it very, very useful to us. Or the lessons that I learned are hopefully going to be immeasurably more valuable to everybody else, because these are truths that are in some ways universal. They really are. There's a million reasons for why the daily is more successful than the 4 hour, and much more successful than the 1 hour, and a million times, a trillion times, a quadrillion times more successful than the 5 minute. I'll tell you. So one thing that I don't show you here is because it's just too embarrassing to show you. But so this was our model portfolio. It's our model portfolio. But I'll tell you the story because it just sort of learned from my mistakes. This is our model portfolio. So that's how it's supposed to be. Then, of course, as usual, my day trading instincts were like, you know what? Screw this. I'm going to put this on a 5 minute chart. I'm going to trade on my own account. I managed to destroy like 6% of my account in less than 24 hours, trading the exact same algo, the exact same framework, the exact same logic on the 5 minute chart. It's taken me a week and a half of just grinding one trade at a time trades I haven't quite yet broken even. I'm literally within 40 pips of breaking even from the idiocy of trading short term. But it's just, I just think it's interesting. It's fascinating to understand that. And, in the meantime, the model portfolio is of course cranking away. You can see, this is literally, guys, by the way, I haven't put any context behind this, but this is just since the new year. This is our model portfolio since the new year. So you can see it's performing quite well. And there's no guarantee it's going to perform just as well. And I want everybody that always you're going to have volatility, regime changes, and things going to go wrong. But if you stay on a longer term chart, if you have an intelligent framework, and if you have an algorithmic approach, your chances of success increase exponentially. That's really what my whole show is all about. It opened up this light bulb in my head. I realized there were so many traders that just didn't have the basic knowledge. There were two things I think most people are afraid of when they talk about algorithmic trading. Number one, they are afraid that it's very complicated when it's not. And number two, they're afraid that it's really hard to learn when it's not. I always say
it's just hard to let go.
And it's hard to let go, being a proprietary trader, right? Yeah. Every one of those things we've tried to address in this show. I brought in Alejandra, who I worked with in the olden days. With Jamie and I used to work with her, and she runs a whole bunch of programmers for Justin, and they do nothing but code for you. The point is, you do not have to know a single thing about programming. All you have to do is have an intelligent, interesting idea for a system, or take somebody else's system and play around with it. The bottom line is, one of the things that I've also created, as everybody who comes into the Trader Fest, is I created a whole free MT4 course. I wonder if I can. No, let me see if I can just find it offline for you, and I'll show you what it looks like, so you guys can see. Let me see. Well, I'll find it in a second. But what I was going to say is, it's easy to learn this stuff. It's easy to learn this stuff because it's basically like learning how to run an app. If you can run Microsoft Office, if you can, learn Word, if you can learn Excel, that's the level of complexity you need to understand. It's just, setting up widgets. You don't have to learn any programming to be able to run algorithms 24 hours a day that have a lot of intelligence behind them, and that could be of, tremendous value to you.
Let me ask you this, Boris. You talked about Jamie as one of the presenters. What are the other presenters bringing to the table?
So thank you for asking that. So there's a lot of interesting people that I brought in there. Robbie, which of course everybody knows, is actually he's working on this whole new system that he's developed, which he calls high frequency trades for retail. And I specifically say it's not at all what you think it is. It's actually this very, very, really interesting multi-instrument portfolio management system that he's developed. I mean, Robbie's whole thing now is to trade very, very small size, lots and lots of different trades, and then manage the exits to a consistent profit. He's been very successful at doing that. It's a completely unique way of kind of he flips a lot of trading concepts on their head by doing this kind of a system, because he doesn't care about. He only focuses on reward. He doesn't care about risk in many ways. But he controls risk in a way that's completely different than the way we're used to controlling risk. So that should be really interesting. He kicks off Sunday. I kick off Saturday, talking about this trend framework that we developed. I don't want to give away too much about it, but because I really want you guys to the show. But it's a really interesting thing. I mean, I'm going to be talking about basically this. How do we get to the point where we could make 1,200 pips since the beginning of the year in a trend framework? And it was a long journey. So what I'm going to do is I'm actually going to take you on all the stupid things we did before we finally came to an intelligent, interesting idea. Because I think it's really interesting to take you through the journey of system development and understand what works, what doesn't work, why it doesn't work, what you need to do, and how you could always improve things. Because hopefully you could refine it from that point on. Alejandra's going to tell you about how she can help you write any of these things without having to know programming. Scott is coming in because he's got a really interesting. Scott is a great systems developer, but he's got a very interesting system where he's going to show you a method that is just actually ridiculously simple, and especially for those of you who are more investment oriented, longer term oriented, that beats the S&P across every time frame you can imagine, which is really hard. I was shocked at how you could create very simple systems that can beat the S&P returns as long as you have the right logic and structure. So he's going to talk about that. Daniel, who's a PhD and about 1 million times smarter than all of us combined, is actually going to show you the key tricks of the trade to how to backtest well. I'm not going to go into.
Hey, Boris, when does Daniel graduate from high school?
I know, it's funny, right?
Really? Huh?
He was lying. He looks like he's 12, but he is actually, I think he's in his 30s. I'm not sure.
Wow. How blessed. Yeah, to look young like that. And then now Adam doesn't look as young anymore because now he's married with a few kids.
That's right. And now that will.
We know what that does to us.
Always put a few gray hairs on you.
Yeah.
But yeah, and Adam is going to. Adam, of course, is the founder of Forex Live, a good old friend, and he's been in the business for a very long time. So he's going to just sort of provide his perspective on how to trade. How news affects algorithmic trading, which, by the way, today, it's actually starting affecting mine. It's whipping me around because the dollar moves are just, all over the place today. The euro just completely reversed, so the yen, everything just.
That was one hell of a breakout over 115, huh?
Yeah, and now we're just eating dust. On this move, which is part of the game, and Jamie is going to take you, and of course. Jamie has like 60,000 followers on Twitter, so he's very, very well known. He's a superb analyst of like longer term trends. So we're going to go through the charts, talk about what he sees as major ideas that that developed. It's funny, James and I, like when I only put this together like about a couple of weeks ago, but this was Christmas time. We were like talking, and we were both looking at dollar CAD. Right, so I'm just kind of like, this was interesting. I swear to God this is true because I'm happy to. I think I actually have the Twitter conversation about this. But we're talking about dollar CAD, right? And we're both saying, you know, this, remember, dollar CAD is like right around here. This is Christmas time, right? 19. It was saying, you know, we're saying, you know, this 36, 37, that is massive resistance. I think we both started looking at the weeklies, right? Yeah, we're looking right in this. And he goes, yeah, you know, this is just setting itself up. You know, he said, I'm going to start selling 36s, 37s because it is grossly overbought, and it's totally setting itself for a reversal. And as you can see, you know, this was a hugely profitable call, and that's what he's all about. He's all about picking a few really good ideas during the year that could make you 500-600 pips on a turn. You know, he's super great.
That's all you need.
Yeah, I mean, you know, I remember when he was younger, he used to always say, and this is actually, I'll talk about this when I talk to you about the development of our system, because Jamie's whole point was every trend starts with a reversal. And that was a very, very interesting insight that he had. And you can see, you know, like
that's kind of like Paul Tudor Jones. All the big money is made at the turns.
Right. All the big money is made at the turns. And so, you know, if you got short 36, 37s, you had all, this is where the money is really made.
You had a good month.
Yeah, you had a great month. So so that's pretty much where we stand. Yeah, so that's where we're at.
All right, so for people that are watching live right now, Boris, and on the recording, can you show them how they go about registering for this event?
Sure. You know, and Dale, I think Dale has the you have the link, or maybe you could just, you know, tweet. You could just send this link to everybody. But it's mt4traderfest.com, or you can go to mt4traderfest/home. Either way will get you there. And all you got to do, all you have to do, is put in your name. This is actually my Yahoo address, but feel free to use your Yahoo address, which is my garbage address. It doesn't matter, so long as you actually check that address, because we're going to send you obviously the registration link, and then the whole show is going to be recorded, edited down to its core essence, and archived for free forever on our website. So if you are registered, even if you can't attend, if you're registered, once it's all done, which will be done by Monday, I will send you the full link to you know, to the show, and so you'll be, you know, you'll be in great shape at that point. In addition to which, just let me see if I can find this. Hang on a second.
I also hear you're headlining the Money Show in New York in March, and both Steve Volge's flying in from Greece, and our own Joe Perry, who's on Bloomberg a lot, and Real Vision, are also going to be there presenting. Hope you guys have a chance to get together, have a cup of coffee or a cocktail together.
Oh yeah, no,
I'm being Match.com, FXMatch.com right now.
You're being FXMatch.com? That's very cool. Yeah, no, you know, I definitely will be there. I think I've been there for like the last 10 years or so, you know, because we're in New York, so it's easy for us to come. And I'm actually also going to be in Orlando in February for the Money Show. So I'll be doing a show there. Here, I think I just found my link. Just one second. I'm gonna show this to you. So in addition to this, just for those of you guys, so I want to pacify your anxiety about learning MT4. If you've never learned MT4, this is a course that I'm going to send you this whole course for free. It's, you know, how to install it, chart setup, you know, indicator setup, all that stuff, you know, and there's my smiling little face. So I walk you through literally like you know nothing into the setup. Plus I archived about 21 execution tools, all of them free, MT4 execution tools from buy, sell, and all the other kind of stuff that I also walk you through that I'll send you. So please come. You know, you don't have to attend. Just register, and you're going to get a massive amount of really good information for free. So I want everybody at the show, if at all.
Looks like a great event, my trading warrior brother. I hope you have multitudes to take advantage of this, and really appreciate your effort to open people's eyes to what may be a better way for them, or an additional way for them to approach the markets and be able to walk away and live instead of being glued to a screen for the rest of their days. Because, you know, money's important, but time is your most important currency, and anything that could make you more time efficient, so you have it to do things like be with your family or take a vacation, I'm all for it. So much success with what you're trying to do. I tip my hat to you, my trading warrior brother.
Thank you very much. I'll just conclude by saying that, I was talking to somebody else and I was saying that basically there's two ways you can trade. You can be a worker bee. You can just literally be like a guy on the production line stamping out trades. You're no different.
Oh, that's Forex Factory. See,
Right.
It's really a factory, so you get on an assembly line.
Exactly.
Okay. All right.
You could be the manager of your own life, and then that helps you by doing that with algos, because the algo works for you and you manage the algos. Then you have much more higher level control of your trading life.
And you don't have to pay in Social Security for your
That's
robots
right.
that you employ, right? They're independent contractors.
That's a huge value. Yes, I forgot about that.
Thank you, Boris. Have a great event.
Okay.
And Joe and Steve are looking forward to meeting you in March at the Money Show. And, I really appreciate the relationship you and I have developed over the years. And you're definitely, I do turn the volume up when I see you on CNBC.
Great. Thank you so much. Thank you, Dale. I'll see you guys
All right,
later.
bye, bud. Okay, buddy. So that's a wrap for us, everybody. Enjoy your weekend. Take advantage of our promo. And remember, most of all, don't just count your pips, count your blessings. And we'll see everyone on Monday. Adios.